Hey traders, just a quick video here to talk about one of the most recent updates to Pine Script, which introduced two new built-in variables, bid and ask, providing access to real-time spread. So this is most useful for Forex traders, but spread does exist in all markets. As far as I know, you need to be logged into your broker in TradingView to get accurate bid-ask spread anyway. So only markets that you can trade through TradingView will benefit from this new feature. And in today's video, I'll show you how to access this on any time frame, because it says here these variables are only available on the 1 tick time frame, but you can use the security function to reference it on any time frame. So I'll show you how to do that in a moment. Why is this useful? The main reason would be to perhaps prevent alerts or prevent your strategy scripts from entering trades during a certain time of day when the spread is very high. So I'll show you an example of that in a moment. But before I get to that, if you want to read up on these change notes, there'll be a link below in the pinned comment. This blue number here is plotting the difference between the red line and the green line, which is the sell and buy price. You'll notice that it doesn't match the actual spread here. The reason for that, as far as I can tell, is that the spread values, the bid-ask values that we have access to in Pine Script, only update once a trade is executed. So they're not real time, which is obviously a problem if you're trying to use them to inform trading decisions. You can only reference historical spread basically, or the most recently used spread for a trade. So the numbers won't always match. I'm talking about this number here and that number in between the buy and sell price there. They won't always match because they're not showing the same up-to-date information. The blue number here is the last executed trade spread. One of the main use cases of this would be something like this. You can see here, this is the early morning for me. This is around 7 a.m. my time, which is when the Forex market's open for trading here, or at least here where I live in my time zone. And you can see the spread is massive. Look at that spread. At one point we had a 24 pip spread. I don't know about you, but I would not want to execute a market order in those conditions. And so one thing we could do is, if I'm backtesting a script, I could tell it to not execute any trades that occur when the spread is abnormally high. That's the most obvious use case for this new feature that I can think of. I'm sure you guys can think of other uses for it. Please let me know in the comments below. I've only just seen this update and I haven't had a lot of time to play around with ideas with it. So let me know down below what you would use this feature for. But for now, to wrap up this video, let me show you the source code here. So I've got overlay to true, obviously. I'm importing my Zen library just so that I can convert the spread to a whole number without having to add extra code, using my toHole function, which will convert pips to whole numbers on any time frame. So even if we go to a yen pair, which has a different decimal structure, it'll still show me the whole number spread. You'll see all of these pairs have a pretty high spread when the market opens around 7 a.m. every day, no matter what pair it is. And so I have a little user input here called max spread, and this will paint the chart red whenever the spread exceeds this number. And this is how we access the spread on any time frame. Obviously we can just go to a 1 tick time frame and we can get these spread values without having to use the security function. But if you want to reference this information on a actual time frame, you need to use the security function. Now you probably would want this to repaint, so this is a repainting reference to the security function. If you're not sure what repainting is, go and watch the video I released recently all about repainting, why you would want it to repaint and why you wouldn't, and how to stop it from doing that if you don't want it to. So we just reference the market we're currently on, the 1 tick time frame, and the bid and ask prices. And then to calculate the spread, we just subtract the ask price from the bid price, convert it to whole numbers, and I'm drawing it onto the chart. And then down here, I have the highlight chart code, which checks if the spread value is greater than our user input, then paint the chart red with 50% transparency. Otherwise, do nothing and leave the chart background alone. And that's it. Pretty simple. Like I said, the more interesting thing about this new feature is the various applications of it. So let me know down below how you would use this. I'm very curious to know how other traders would use spread in their scripts. For me, it makes most sense to use this in the backtesting process to screen out or filter out trades that you wouldn't normally take in real life in real markets, to give you a more accurate backtest result. If you're automating your trading through something like Pine Connector, then that actually has an inbuilt spread filter anyway. And if you're not sure what Pine Connector is and how to automate your trading through Pine Script, go and check out the videos on the channel. I've got a whole playlist somewhere showing how to automate systems. So this is one way you could go about building a spread filter into your TradingView script instead of relying on Pine Connector to handle all of that on their end. The main reason you do that is just to get a more accurate backtest result, because if you're getting a lot of trades during this time of day, if you're backtesting on the 5-minute time frame or below, you probably don't want to be trading during these periods of time in your backtest, because that's going to skew your results and give you unrealistic backtest results. Because for those beginner traders watching, if you're not aware, if you execute a market order under these conditions with a spread this high, your position is going to open for a massive loss straight off the bat, especially if you have a very large position size, which lower time frames tend to require in order to generate a profit. So if you don't want to take any trades, just add this check to your trade entry conditional filters, but use a lower than instead of greater than symbol. Anyway, that's it for this video. I'll catch you in the next one.